Good evening, everyone. This is Rodney with the market wrap for Thursday and the Triton Wave strategy for Friday, August 31st, 2012. Let's take a look at what the ES did on a daily basis. The projection that I've been talking about, we were down 10 handles today, and at one point 11 or 12 it finished close to the low of the day. The key thing is that it closed below the 21 period moving average on the daily, and it continues to drift down a little bit. It's up 50 cents now. It's been down $1. It's been down 1.5 points in the aftermarket, but it is the first close above the 21 period moving average since back in the end of July 26th. So what we're going to look for is a continued downward stream toward the 55 period moving average on the daily, which is 1378, and if that doesn't hold, down to 1365. And this is a real possibility depending on the Bernanke announcement tomorrow. It's on the odd chance that Bernanke comes out with some kind of move to inspire everyone to put money into the market, then we have to have shorts in place above 1408, 1410 area. So all the positions I have right now are puts, but they all have stops in place. You can notice the rollover on T1 has been slightly, gradually rolling over since August 21st. If we come over here onto the right-hand chart and look at what happened, it's been bouncing all the way back here when this was above the 21 period moving average. It bounced above the 377. It bounced off the 377 again. Today, however, let's just move right in here. It gapped down 600 or 700 points and then kept drifting lower until 9:30 Central Time. Then it came back up and it hit the 21 period moving average of the 21 minute cash price. Now notice there was no close above the 21 period moving average. So only the candle is sticking, only some of the candle is sticking up above it. And there was a big sell-off starting around 2:30, 2:15, all the way into the close. So now what we have is on the 21 minute, we have T1, T2, T3, T4, and T5 is now 0.26 points away from being negative. The last time this was negative, let's move this over here. The last time this was negative was back in July 26th, when it went above the 377, and the S&P was selling for 1343. So what can we expect here on a retracement? Besides what we went over on the left-hand side on the daily, let's just do a fib retracement tool here. And a 50% retracement of this move would put us down to 1374. Let's see what 1374 looks like. On the daily chart, it's the 55 period moving average. And a 618 retracement is 1362 on the daily, on the 21 minute cash price. On the daily price, 1362 is right about at the 89 period moving average, and also at the trend line that goes back all the way to the beginning of June, which is parallel to the inside trend line that goes back over a year. So everything's happening the way it's supposed to happen. Again, major announcements can turn this around, but I don't think they're going to upset the waves, and I think the waves are telling you what's going to happen before they actually happen. It is an early warning system. If you're following a day trading program, this really, it was very hard to follow because these waves, there was so little volume and so few candles established that it was the only real buy, if you weren't already in it from the night before, the only real buy came at about at about 10 o'clock on T2 that took you up to the 377 exponential moving average of the 1597 tick chart. And then it dropped off, but it really didn't allow you to get enough time to get in. So let's go down to a 377 chart. Very difficult to follow. I had a problem following the waves today. So unless you were following the long ones, again at 10 o'clock, and out at you weren't going to make more than 2 or 3 points on this one. So that's why, since there was mixed signals on the waves on the daily because there was so little participation in the market, I was looking at the 21-minute cash price that gave me a nice look of the candles dipping below 377 and then coming back up and hitting the 21 period moving the 21 period exponential moving average on the 21-minute cash. And then it hit that and then just summarily basically went right back down into the close near the lows of the day. Okay, looking at Goldman Sachs, Goldman Sachs was sort of following the market, but it still has a little bit of strength. It's on the daily chart, it's still above the 144 exponential moving average, and it doesn't really show any clear signs of breaking down. So this is still going. It's still going sideways. It's uncommitted. I have no opinion about which way this is going to move yet. The daily's rolling over a little bit, but the 21-minute isn't clear about its signal. If we look at Amazon, Amazon just continues to trickle up. Even though it was down 90 cents today, it's still staying above its 8-period moving average, and you can see on the 21-minute cash price on the right-hand side, it's just dribbling up. As the tighter the formation here, the tighter the on the cash price, on the closing prices for each candle. You can see that. The closer the wave formation, it's not really committed. It looks like it just wants to keep on going up. So I think it's a little bit overextended here. We're right at an all-time high, and it looks like it wants to go up, but in a down market, I'm not playing Amazon on the upside. All right, let's take a look at Baidu, one of my favorite stocks on the short side. I got in again at the 21-minute. Actually, I got in at the I made note last night that I got into the 55-period moving average, exponential moving average. At here, I took a hit, stayed in it, came back down the next morning, and the last 2 days it's been coming down. I like this on the downside. It has not disappointed me. I'll stay with it until it gives other signals. But now T1, T2 are still above zero, but they've been rolling over for the last 7 trading days. And if you notice, T3 has just gone below zero, and T5, the most important longer-term one, went back under zero today. So I'm looking for a target price of 100 on Baidu in the not-too-distant future. All right, Netflix is actually starting to look interesting again on the downside. I think the upside is toast right now. The 21-minute exponential moving average the 8 got above the 21. Let me see, is that the 8? The eight went above the 21, and then 5 days later it curled back over. So it was up right in this area here. You can see, I'll extend it a little bit. For one day it was above, and then it started moving down. So on the 21-minute chart, it actually went below 0 on T1, and this all happened today. T1, T2, T3, T4, and T5 on the last hash mark of the day. The last two is completely below 0. So the last time this was all below 0 was way back at the beginning of August. So I like if we can get Netflix at if you get a kick up like a couple points, 61, 61 and a half, in between the 8 and the 21 exponential moving averages of the 21-minute cash price. That would be a great short down to, let me see here. Okay, would not be surprised to see this at 53 or below. Looking at Apple, one of my favorite stocks to play. Let me see, Apple was down 9-10 points today, and it's down another, let me see here, hang on. It's down another 72 cents in the aftermarket. It finished right at or below its 8-period moving average, which is the first time since the end of July. So I'm looking for a further break in Apple, and not just because it finished below the 8-period moving average, but because T1 through T4 is completely below 0. In T5, the part of the major wave of T5 is below 0 as of today, and the last time that was below 0 was at 600 on Apple on July 31st, the same place on the daily when it took up above the 8-period moving average. So let me see here. Let's get a projected price here for Apple. I could see Apple coming down to 650 pretty easily, which is only like 13 points away. But in the longer term, 650 will put it to 21-period moving average. I think it'll hit 650 before it has any kind of a bounce at all, but it actually may come back. If this market washes out like I think it's going to start unraveling after Labor Day, I could see Apple coming back down to 600. And I'm going to be watching the 21-period moving average. On Apple, I like watching the 1597 tick chart for indications. Go back here, go back here. So the last time it was above the 377 was back on the end of July. And it's now currently below it for the first time since the end of July. So it's been a month above the 377. It's now below it. The 8 has crossed the 21 on the 1597 tick chart on Apple, and they have both crossed the 55-period moving average, and these are all Fibonacci numbers, and across the 377 exponential moving average. So I really, really like Apple on the downside. It also went below 0 today, completely below 0 on T5, and that's the first time that's happened since July 27th. The same time it went above the same time the 8 and the 21 crossed on the daily. So I like Apple on the short side here. If we're looking at MasterCard I've liked ever since. I've waited for it for a very, very long time for the major wave on number 5 to start going below 0, and that happened, and it started ticking down. Now, did take I got in actually a little bit early. I got in back here at 4:25. So I did take some heat on the 21 minute a couple days ago when T1 started fluttering above below and then above zero, but I stayed in it because all the major waves on the daily chart were below, and I still knew I still have 3 weeks left on expiration for September, which is the ones I'm playing. And today they came through, and T1 is below zero, T2 will be there tomorrow, T3 is heading down, T4 is completely below, and T5 is completely below. So I still like, as a projection, I like MasterCard to 412 for the immediate future. So 8 or 9 point drop. If you're playing it, use a delta of 72, which would be in the money for like about 5 to 10 points. And if you're for September, if you're going out a little bit further, then you can use a delta of 50. That is, if you're going out further in time, you can use a smaller delta and just play the premiums. All right, following gold, GLD, gold ETF. I mentioned not to chase it up here because it's going to come back down and test on the daily either the 8 or the 21. Everything's turning up here. It looks really nice for a swing up. Let me see. Today it's still the T1 and T2 are still above zero. T3 will be above zero tomorrow. So that looks like a good play to the upside. It would be nice if you could catch it right in here, right with the 3.7 on the 21 minute. If it came down any kind of flush out tomorrow morning. And GLD would be a good buy because T1 on the 21 minute is about to curl up to zero. So any move down to 159, 158 in this area here. And once T1 kicks above zero, it'll take all the rest of these waves up with it, and it'll continue the daily to the upside. Okay, last but not least is Google. I mentioned Google has a year-and-a-half trend line that breached yesterday by about 684 to 689. But it's starting to roll. It's starting to roll over. But even with this breach yesterday, it's still curling over a little bit on T1. But more importantly, for like 2 or 3 day, 4 day trades, like short swing trades, which is usually what I do in options. It looked like it was starting to get a little peaky in here. And also off the daily chart, it's hard for me to imagine this was just going to bust through after making a 120 point run in like in the past month. So as it happened, T1 started coming back down zero at about 1:45 this afternoon, and the decline in T2. T3 is somewhat below, halfway below zero. Let me see, T4 is completely below zero and T5 is halfway. So it's basically it'll follow the market. Now, if the Dow goes down, it'll go down. If the Dow goes up, it'll go up. Depending on what Bernanke says, my bias right now is to the downside and continues to be. I want to bring in a chart of the Aussie yen. This is the risk on, risk off trade. This is a 15-minute chart going back 2 days. It's a nice trickle down, a little bit of a pop at 2:30 let me see, when was this? 2:30. 2:30 this afternoon, and then it continued down, especially after hours. But more importantly, that's a 15-minute chart. More importantly, the daily chart. Now, when I brought this to your attention way back up here, I said that this is a 50% retracement from the high of March 18th to the low of May 31st or June 3rd. This is a 50% retracement. There's a lot of supply in here, and I didn't think it was going to make it. We started rolling over with the Dow, and that's when I started taking short positions in the SPY. Right now, it's continued down, and the next target on this is a daily chart. So if we spread this out a little bit, see a little bit better. Let's see, zoom. The next target is 79.49, 79.50, 79.50. These lows right here, which would represent about a 50% retracement from this low to this high. We may get a little bit of bounce, and then it'll continue back down again, probably to 74.60. That's the market wrap for tonight. I will see you in the next update, which will be Monday evening. Have a great Labor Day weekend, and good luck trading, and see you at the next update. Good evening.